Hello, welcome to Geojit Spotlight. India's market underperformance is continuing. This year, so far, Nifty is down around 3.6%. During the last 3 months, including February, Nifty delivered negative returns. There are mainly three reasons for this market weakness. One, even though inflation is declining in the US, the rate of decline is very slow. So the market now believes that the American Central Bank Fed will continue to raise interest rates, perhaps three more times in the coming policy meets. This fear has led to rising bond yields and rising dollar index. This has negatively impacted equity markets. Second, FIIs sold heavily in India so far this year. They have been selling heavily. They sold equity for more than 50,000 crores and moved the money to cheaper markets like China, Hong Kong, and South Korea. Third, the Adani crisis impacted sentiments in the market. There are fears that the Adani crisis may impact the Indian banking system. However, this fear is unfounded. The Indian banking system is very healthy, and the banking stocks appear to be oversold. So there is a possibility of a turnaround in banking stocks, particularly in the high quality private sector banks. The global economic and market construct is not favorable for a rally in the near term, particularly when the US inflation is high and the Fed is raising interest rates. However, if the US inflation shows a sharp declining trend, the situation can change. So investors should watch out for this important data, that is, US inflation and the Fed's policy response. Technically speaking, there is a possibility for a rally next month, that is in March. This is the third consecutive month of negative market returns, including February this month. If you look at the last 20-year Nifty data, there had been not even a single instance of negative returns for 4 consecutive months. This is an important historical data which investors should keep in mind. When there is high uncertainty in the short term, what should investors do? India's medium to long-term prospects are extremely bright. There is a consensus now that India will emerge as the third largest economy in the world by 2028. There is a very high probability of India becoming an $8 trillion economy by 2032. This means phenomenal wealth creation will happen through the stock market in the coming years. This should be the overarching theme that guides investors in their investments. Therefore, use the weakness in the market, the short-term weakness in the market, to accumulate high-quality stocks for the long term.